remove those lines from here. So daily time frame, and first of all make sure you check the video I mentioned before. In this video we will go over the trading setup we had on the euro US dollar. So for AMD, for accumulation, manipulation, distribution model, after the hard time frames liquidity is taken, we need of course the hard time frames levels of course first in order to look for potential trading opportunities. So first of all, of course, we need when we are looking for potential trading setup, of course, we need like a hard time frame area, hard time frame PD area, such as for example fair value gap zones or previous highs and lows and so on. And what we are looking is of course in, for example, on the lower time frames, if we have like accumulation, let's say in the Asian session range, we want manipulation. We want for the price to start manipulating into the hard time frames PD area, such as for example daily fair value gap zone here, for example, from yesterday's trading setup on the euro US dollar. So this is the manipulation phase, and then what we're looking for is potential setup, of course break of the structure, and then potential opportunity in order for the market to have another leg lower. In this example, when we are looking for short trades to participate into this distribution phase. So we have accumulation, manipulation towards the hard time frame PD area, such as in this case the fair value gap zone, and then break of the structure here in order to look for potential distribution in the other direction. Now let's jump to the euro US dollar daily time frame. So this is the daily time frame which I also sent over yesterday to my students. What we were looking for after market moved to the upside to this daily fair value gap zone displacement imbalance, we said we can start looking for potential opportunities to the downside. So this was yesterday on this daily candle. Today is Friday, so yesterday on Thursday we were looking for that setup. So daily fair value gap zone here, and on the 4-hourly, as you can see, price was pushing to the upside. And yesterday, as you can see, on the 6th March, what we had here, what we paid attention to was, first of all, we had this swing low. Market was pushing to the upside, as you can see, on the break to the upside. We had also imbalances, the fair value gap levels, bullish fair value gap zones here. And as the market was pushing to the upside and started retracing here, we said this is the liquidity level, the 4-hourly swing highs. So the market is always moving whether in premium or in a discount. So for example, if we have like price moving from point A to point B, we have of course dealing range between those 2 points. So for example, the middle point, the middle area is called of course 50%. So if we are looking for long trades, of course we want to be looking for possible buying opportunities in this discount area. So this is the discount area, and if we want to look for, you know, for those retracement trades, you can still look for possible retracement trades when the price is in the premium, when the price is expensive, when the price is above 50%, you can still look for potential trades in order to trade this retracement back towards the dealing range of this discount zone. But in order to look for possible shorts against the main trend, we want to see of course first this high to be taken out, liquidity must be taken out, because the previous swing lows and swing highs works, not works, but serve as a liquidity pools, and when you see like liquidity is taken, you can look for possible opportunities in order to look for short trades in this case. So if we go back to our example here, what do we notice is if this is our point A, and we have this leg to the upside, this is the point B in this example. So the link range will be the link range will be of course somewhere in the middle here, let's say 50%. So if we want to look for buying opportunities, we'll be looking for long opportunities here. And if you want to look for short trades, of course we want to see opportunities after this high is taken, after liquidity, the buy side liquidity is taken out, and then we can look for possible opportunities to target the next liquidity pool. In this case, as you can see, we have 4-hourly fair value gap zones, and if you measure with the Fibonacci in this case, then of course this is the daily range, and we can look for possible opportunities in order for the market to start retracing back towards the next liquidity pools, such as bullish fair value gap zone here, and more later, as you can see, 50% area, and then continuation lower. But here what we were looking for was potential. We had 4-hourly, as you can see. Let me write here a second. So we have 4-hourly high, 4-hourly high. So this was the buy side liquidity, and we had also this daily fair value gap level. So we had strong resistance on the upside, and as we said, if we want to look for accumulation, manipulation, distribution model, then of course we need to see move towards those levels up here. So if those are those levels, and on the lower time frames you see like you have like a range, you need to see manipulation towards those prices, and then you want to see break of the structure in order to look for of course setups for this distribution to the downside. So we have accumulation, manipulation towards this higher time frames PD area, and then distribution to the downside. So let's jump to the 1-hourly time frame or better 15-minute time frame here, so you'll be able to see clearly. So here, as you can see, this was the 4-hourly swing high. What do we notice here? This is the blue box. As you can see, this is the Asian session range. So this is our accumulation. So what do we see here? During the Asian session, price was moving into this range, and as we're getting closer to the London Open, what happened? Price was continue moving in this range, and what else we have? After London was open, we swept the lows, and we had this manipulation move towards what? Towards 4-hourly swing high, buy side liquidity, and also this daily bearish fair value gap zone. So in this case, this was our accumulation, this was our manipulation toward this high time frame speedy area, and then what happened in the New York session? We had this setup to participate into the distribution phase, targeting the 4-hourly fair value gap, the bullish one, as you can see. So what do we see here? If I zoom in, you can see we have this accumulation again, we have manipulation towards the daily fair value gap level, and also the 4-hourly swing high working as a buy side liquidity. So we have this manipulation towards those levels. As you can see, after the news were out, we took again the buy side liquidity, the highs of the day. And what happened after? we have change of the structure. As you can see, candles closed below all those lows. We have retracement back. On the way to the downside, we have also a fair value gap level. And here, as you can see, the change of the structure was confirmed with this lower high with fair value gap zone, bearish one. And as you can see, also we had also strong close to the downside just as an extra confirmation. In this case, you'll be looking for entry here, stop loss above the structure, and you can target either the Asian session lows here as a target, or 4 hourly bullish fair value gap zone. As you can see, if you want to aim for more, if you want to just hit for and aim for low hanging objective, then of course you could also took this straight out at more than 1-to-1 in terms of risk and reward ratio. Again, as I said before, we have accumulation, manipulation towards this daily and 4 hourly PD area, and then we have this distribution setup, change, break of the structure, and setup to participate into this distribution leg lower. Hopefully this video was helpful. Make sure you check it again in order to understand better, and we catch up soon in the next videos. Take care.